welcome to the May Cereus Real Estate Happy Hour. We've got a few people who've signed on, and I assume we'll get a few more people trickling in. And I'm doing my best to get the recording set up so that it appears correctly. We've had a few technical difficulties in the months prior, but hopefully it'll show up in a version that you can digest, at least in the audio fashion. So today I wanted to go ahead and answer your top questions. Um, Ever since I started the marketing campaign that a lot of you have seen and therefore signed up as investors, I've done dozens and dozens of investor calls. And basically, I want to just have one happy hour presentation where I go through a lot of it kind of in rapid format. I'll try to answer as best as possible in the time allotted. And then we can do a little bit more Q&A at the end and maybe some introductions to any of you who are on at that time. And then in that way, I'll have a recording where I can point to in case I don't get a chance to meet you on a Zoom call face to face. You can at least go through the recording and answer most of the questions that you might have. Okay, so let's get going. I always start out the presentations with a quick introduction about who I am. So I'm Dr Shin. I'm a physician, specifically a urologist or urologic surgeon. I'm also a real estate investor. On social media now for about the past decade, I have been under the handle the Darwinian Doctor, and I'm also the founder of Cereus Real Estate, which is why you're here. So I'm an active and passive investor in about $100 million of real estate. So obviously not all of that is owned by me. It's sort of a group investment alongside you as investors. So, um, a few minutes on my story, and I'll go through this quickly. If you've seen other happy hours, I usually start out this way, so you may have heard it before. But basically, I grew up on the East Coast from first generation Korean immigrants. And really, there was no formal personal finance education that my parents enjoyed, and certainly I didn't either. So, unfortunately, we ran into financial scarcity. In the late 90s, as I was growing up, there was a recession and my dad's job essentially went away. So all of a sudden, in the course of a few months, became very stressful, and we got evicted from our house. So house got repossessed and had to essentially move out over the course of one weekend. My answer to the financial scarcity in middle school and high school was just to really kick ass academically. My solution was to become educationally excellent to pave the way towards a great career. So I graduated high school as valedictorian. I went to Yale as undergrad. And then, just like so many of you, I got on the conveyor belt of the medical educational process. So I decided to become a physician, not only for financial stability, but also because I wanted to help people. And this was a really good way of sort of melding those two things. It was also one of the three options my parents gave me, right, as a first generation Asian child. So it was University of Pittsburgh for medical school, then USC urology for residency, 6 years there, and then on to a job at Kaiser in Orange County. And a couple of years into that job, I had theoretically won life, right? Um, I had a big paycheck as a physician. I was married. We had started a family. I had this big doctor house in Los Angeles. I was driving a fancy car. We had a beach club. Our kids were in private school, but there were cracks in that foundation. So every week I was spending 10 plus hours in the car because I was driving back and forth from LA to Orange County. The overnight call was exhausting because we covered about 600,000 lives every night on call, and that led to many, many emergencies, even in urology. And there was this endless pressure to see more patients, and it wasn't under my control. It was just this, if you're not meeting the productivity expectations in Kaiser, you're under pressure to basically raise your productivity. And in a lot of ways, I think a lot of employed physicians can relate. You feel like the metrics are being valued over quality patient care. And honestly, I never saw my kids. So I would leave before they got up in the morning. And by the time I got back at night, most days they were already in bed. Maybe I got to give them a kiss goodnight, right? So I also had a ton of debt, as many of us had. And I was paying my highest marginal tax rate was over 50% when you considered federal and state taxes. So the final crack in the foundation, I honestly had and still have some pretty serious concerns about the future of US healthcare. The increasing power of private equity and insurance companies into medicine is very concerning to me. So my solution was that my new goal from that point on was to go for financial freedom. And, the most uh, tried and true way to have autonomy over my job and life is only really possible through financial freedom. So I chose the most common vehicle to get there, which is real estate. So real estate, you basically can enjoy tax advantaged growth, and it's also a dependable source of cash flow. So your story is probably very similar to my own. I've spoken to tons of you over the course of the last few months. You want financial security, you want passive income, you want more time freedom, you want to leave a legacy for your kids and time to pursue your own interests and passions. So here's Cereus Real Estate. And basically started in January of last year with 0 members. A bunch of you came over from, your longtime readers of my blog, or you saw me on Instagram or something like that. So we grew fairly quickly, and then it was a steady growth. And then a couple of months ago, I started an advertising campaign on Meta, and we're increasing very quickly now. So we're up to about 620 members and potential investors. So this is the list that I'm hoping to cover today. As I started writing down common questions, I was going for 5 to 10 and overshot a little bit. But I'm going to go through all of these quickly. If you have additional questions about these specific things, if we have time at the end, certainly I'll be happy to go over it in more detail. But let's jump into it, okay? So, um, first of all, before I start, I want to just say, the goal of this is essentially not to replace a one-on-one interview and talk. I want to know about you. I want to know specifically what your financial goals are and if Cereus Real Estate is right. But I also want, one of the hallmarks, I think, of my personality and the platform that I've grown is transparency. So I want to just be real. I want to put down the reality of investing into something like this, as well as my motivations and what you can hope to expect. Okay. So, what is Cereus Real Estate? Cereus Real Estate, as of the legal paperwork that I completed in the first half of this year, is a customizable real estate fund. So, I devoted a full Cereus happy hour last month or the month prior to explain what that means. But basically, it is a vehicle to aggregate investor capital into institutional quality investments. And right now, Cereus Real Estate, I use the royal we a lot, like we as in Cereus Real Estate, but really it's me. It's myself, it's my assistant, and all of you. I anticipate that in the future, as we grow and our ability to aggregate capital grows, I'll bring on more team members, but I'll talk about that more in a little bit. So, a customizable real estate fund, it's blends the best qualities of a formal real estate fund with autonomy and choice on the part of the investor. So it's not a blind fund where you just hand over capital and I put it wherever I want. You retain choice over your investments. That's actually a specific quality of requirements of this type of real estate fund. So I will offer up investments through the fund, and you'll have a choice as to whether or not you want to invest into it or not. And the power of the fund model, though, is that I can take all of the investments from you and aggregate it into one pot and bring that over sort of in one go into a deal. And there are a lot of benefits to that on all sides. So I'll go into that a little bit further in the presentation. So another really common question is, how do you find deals and what's the due diligence process? So basically, I am in various networks of real estate fund managers and also operators. So operators, it's just another term for the sponsor of a real estate deal. So real estate fund managers are people like me who are basically the boots on the ground in terms of talking to you, answering the questions, aggregating the capital, and funneling that capital into a great deal. Operators are the people who are operationalizing the plan. So they're the ones who are buying, renovating, and improving the real estate assets to try to drive a profit and generate a return for investors. So I'm in various networks of this, and deals kind of come to me at this point. So various deals come across my desk, and then there's a very extensive vetting process that I put them through. So I'm evaluating all of these things. And if you don't know all of these terms, that's okay. That's why I'm here. We can talk about it. So I'm evaluating the operator, the asset type, the raise amount, the total project cost, the projected internal rate of return, an equity multiple, the cash on cash return, the preferred return, the hold period, exit cap rate assumption. So all of these things, I'm trying to see, does it make sense? Is it a reasonable sort of financial model that they're using to generate their expected return? Are the risks in this investment reasonable? And what are the potential things that could go wrong? And is this something that makes sense to bring to the investors? So it's a pretty extensive due diligence process. And I'm trying to take out as much of that upfront work as possible. Obviously, before you invest into any deal, I also want you to sort of replicate this on your own, but I'm trying to do as much of it as possible for you. What is a minimum investment in a deal and why? Why is there a minimum investment? So the minimum investments for Cereus Real Estate are going to be $50,000. And that doesn't mean that you can't invest more, but that's going to be sort of the floor. And there's often a question, why do you have a minimum investment? And the reason is that it's trying to drive a happy medium in terms of making it accessible to as many investors as possible, while also minimizing the number of investors in the deal. What does that mean? So you sort of want to be Goldilocks. You don't want too many investors in a deal. You don't want 1,000, but you also don't want, probably just one investor, right? So the reason is that for everyone who invests into a deal, there's a commensurate amount of paperwork, vetting, and honestly, legal cost on the side of myself. So there has to be sort of a minimum that allows enough sort of fees to cover all that costs. And also, just honestly, since Cereus Real Estate is myself, there needs to be enough time where I can go through everyone and talk to everyone and feel like I'm doing a great job in terms of communicating the risks and benefits of every investment. Okay. So these days, $50,000 is basically that happy medium. Um, so who can participate in an investment? Now, the way that the real estate fund is set up, legally, only accredited investors will be able to participate in Cereus real estate investments. And accredited investor is basically a formalized term by the SEC that you need to make at least $200,000 annually if you're an individual, or if you're a couple, it can be $300,000 kind of together, or you have $1 million net worth, not including a primary home. So when you put together all of your equities and stocks and retirement and all of these things, or your rental property, it equals at least $1 million or more. Any one of these three things can make you an accredited investor. There's some fringe cases that can also qualify you, but these are the main things. So basically, I would say that most physicians within at least 1 or 2 years of graduating residency should meet this criteria. If not, time to renegotiate that contract, okay? And that's one bar that you need to meet to invest into Cereus real estate. The second bar is that you have to be able to pass a certain amount of scrutiny. So there are various laws that are basically trying to protect against money laundering and bad actors and criminals from investing and funneling money into, deals like this. So there are, as part of your onboarding, if you decide to invest, when you sign up for the investor portal, there's going to be a process where there'll be a basic identification check to make sure that you have, at least a driver's license or a passport or something like that that can prove you are who you say you are. You're checked against international watch lists to make sure that you're not on Interpol's most wanted list. And there also are records on my side about the onboarding, our communications back and forth, and to verify that we know each other, basically. So that's who can participate in an investment. This is a big one. So this is basically transparency here. But I think, if people feel comfortable with me on a call, on like a Zoom call, inevitably, one of the questions might be, so why are you doing this? Why?
So
Oh, sorry. Let me just make sure to mute. Um, oh, you've muted. Thank you. So the question is like, how does Daniel Shin benefit from doing all this? So to just reiterate, right now, I practice medicine, but I practice medicine as a locum tenens for 1 week out of the month. And the rest of the time, I'm spending on doing this, and I'm also spending on basically managing my own privately held real estate portfolio as well. So why do I do this? It's a lot of time investment. It's a lot of stress. And honestly, I put a lot of capital into the legal structure and the lawyers and putting this all together. But this aligns with my life mission. So if you get to a certain point, and I hope you'll get there soon, you realize that you're making enough money, you're going to be okay financially, and you need to figure out what is going to be your overarching goal in life to give your life purpose. And right now, one of my big goals in life is to bring as many professionals, as many physicians closer to financial freedom so that you can enjoy all of the things that are possible out there, including better life satisfaction and financial freedom and security and a legacy for your kids. All of those things, I want to help you get there. So the other really good thing about a real estate fund is that I can, as I mentioned before, aggregate all the capital into one pot and bring it over to an operator. In return for that, I'm taking so much work off of their plate, and in many times, I'll be actually making it possible for them to do the deal because without our capital, they might not be able to have enough capital to actually close on the deal. So, as a return for that, what I'm hoping to get from an operator are better terms. So, What does that look like? So, um, the more that you learn about real estate syndications and deals like this, you'll know that the operators are called the general partners. They're the people who decide what color to paint the walls, how many units to renovate, um, how much rent they're going to be charging. And they also take on the legal liability, but they also carve out usually 20 to 30% of the equity and ownership in the deal for themselves. So there's a split between the general partner share and the limited partner share. So a common scenario might be the general partners are taking 30% of the equity and the limited partners split the remaining 70%. So in exchange for bringing instead of a $50,000 check to an operator, we together can bring $2 million dollars or $3 million dollars. There's an incentive on the operator's part to offer a better split. So maybe they're offering a 20-80 split where we are enjoying 80% of the profit. So that's what I mean by better terms. So basically, what I'm hoping that by aggregating the capital, I am securing better terms in some fashion for you investors. But there is a profit component. So basically, by doing all the work and due diligence, there's likely going to be an associated fee for that. It'll probably differ on each deal, which I'll disclose up front, but it's not going to be much. Honestly, it'll be a small amount that's going to allow me to cover legal costs and all of the regulatory filings with the SEC that I have to do for each investor. There are things called like blue sky filings, which can be as much as $1,500 per investor in a certain state. So I'm going to shoulder all of that, but there'll be certain fees to cover that. But the goal is that I'm creating a win-win scenario for everyone involved. I think that that is possible in real estate, that you as an investor are getting a better investment experience and also better terms than if you were to go to someone on your own. The operator is getting an incredible amount of convenience by dealing with a real estate fund instead of 50 different individuals, and that I can operate a real estate fund and get the power of group investment, and I can invest alongside you and get better terms as well. This fourth one here, utilizing the capital for Cereus's projects. what I envision, and we'll see if we get there, but if we can consistently aggregate enough capital, that opens the door to all sorts of interesting opportunities for us in Sirius to expand as a team and do deals that we keep under our own roof, and hopefully lead to better profitability down the road. So there's a lot of different ways that this kind of is what I want to be doing right now. And this is essentially kind of the list here. So, any questions on this? More than happy to kind of go through that at the end there. All right. I'm trying to keep a little bit of eye on the chat here. So I've got it open on my second screen. Let's save the questions for the end, Yusuf, if you can hang on just a bit, and then we'll go back and go over questions. Okay. So why invest with Cereus Real Estate versus going direct? So I just covered some of this, but I'm hoping that by going through Cereus Real Estate, you'll have access to better terms than if you're going to go individually to an operator, and also that you're going to get access to private equity quality investments. So the thing about this is that a lot of sort of the most professional operators who are offering deals like this, their minimum investment might be $1 million. So most of us, despite being physicians, are not going to be able to liquidate $1 million to invest into one deal. And we also might not want to concentrate that much risk into one deal. I probably wouldn't recommend it, right? But by aggregating, we can each put in 50K and then bring over, and we'll meet that threshold and can still invest into something that only right now maybe a private equity company might be able to invest into. So we're getting access to that by aggregating capital. And also, as I mentioned, I'm trying to help as much as possible on the due diligence front. And also, as I said, so I spend 75% of my time doing this. You get access to me, my expertise in the real estate investment world, and also my thoughts. And uh, that is something that is, I think, is the joy of being on the early side with a real estate fund like this. So unprecedented access to someone who has your best interests at heart. All right. So what markets will be available for investment? So this is the US. This is where we're going to be investing. But in actuality, most likely, if you put sort of a very kind of a fat L onto this map, that's probably where you're going to see the investments. So probably Midwest, South, including Texas, and heading through the Southeast as well, down to Florida. Why is that? Because, generally I am looking for deals that generate positive cash flow. That is, once the deal is stabilized, I want deals that are generating more income than they have in expenses. What are the expenses in a deal? Paying for property management, paying for debt, paying for insurance, paying for renovations. And honestly, believe it or not, a lot of real estate deals in places like California and New York, they don't actually generate positive cash flow because the way that they are generating an income is they're tolerating a loss until they sell the property that has appreciated, and they use that to generate the profit in the deal. That is risky though, because at any given moment, if they cannot sell the property, they're incurring losses on a continual basis. So one of the things that I'm looking for to mitigate risk are deals that will generate cash flow as soon as possible. So the places where you're going to find that is generally those places that I mentioned. So that's why you're going to find it generally in those areas. What type of assets will be offered? So the real estate fund that I created, I chose a specific structure that allows us to invest not only in formal real estate like apartment complexes, senior living villas, mobile homes, and manufactured housing, but it can also potentially invest into things like debt funds and things like that. I plan on most likely in the beginning offering traditional multifamily, but it has a flexibility to offer different things later on. And there are pluses and minuses to these other strategies, but certainly I'll be taking feedback from you as investors to decide on things like that. So this is a common question. What's the track record? How have your investments gone? So as I said, last year was the first year that Cereus Real Estate existed. So this is the track record. The investment that I offered last year, the Hampton Meadows, it was a $24.75 million acquisition. And our group invested into it. So I brought over about 2 dozen investors, and we purchased about 10% of the equity in this deal. So we are owners of about 10% of it. And it's a 360 unit apartment complex. And I recently sent out a 1 year financial report, but basically, the renovations are at a pace that is 1 year ahead of schedule. So the plan is to renovate 120 units in total. About half of those are already renovated at 1 year, even though the pro forma plan called to renovate those at a pace of about 40 per year, so over a 3 year basis. So renovations are ahead of schedule. Gross revenue almost hit 100% of projections last year, and expenses were held in check to only a little bit above projections. So distributions were about 87% of projected levels. So I would say it's on target. There's a little bit of stress up and down, but I'm pretty happy with how things went over the first year. So that is a track record. As we invest into other deals, the track records will accumulate, but we're in the early days. So, as an investor, what kind of communication can you expect? So, you can expect quarterly reports. That's pretty typical. Every quarter for your investment, I'll send out a report about what's going right, what's going wrong, what to expect. And also, you can email me, you can call me, you can set up a Zoom call. And again, um, early days, unprecedented access. That's kind of what it's all about right now. And also, come tax time, you'll get an annual K1. And specifically, since this is a real estate fund, you can invest into 5 deals, 20 deals, but my accounting team will funnel it all into one K1. So the plus side of that is that there's much less expense and headache for your CPA. The downside is that if one of those 20 deals is a little bit late with their reporting, we may take a little bit longer to generate that K1. So it's pretty common as a real estate investment. When you are investing into things like syndications, it's pretty common to file late, and that's okay. I often file late as a real estate investor. It just means that you just have to let your CPA know. What are the risks of investing into something like this? So the thing about a real estate investment that spans 4 to 7 years, which is a typical term of your, real estate syndication, um, is that reality might not meet expectations. So if you saw, I've showed this before, but if you ever saw a spreadsheet that is a common tool to generate these projections in terms of what are the likely return scenarios, it would melt your mind. There's like 1,000 different variables. So if any one of those is off by too much, then that might affect the returns. So, for example, if the rent projections call to raise the rent from, say, $1,700 a unit to $1,900 a unit, but over the course of the investment, it can only get to 1,800. That's a pretty significant difference over 500 units, right? So that might affect the returns. Um, so that's why our job, my job, and your job is to just go through these projections and ask ourselves, does that really make sense? Does it make sense that they're saying that they can push projections? And in the webinars and presentations for specific deals, I'll be attempting to help you answer that. So um, there's also a chance to lose capital. So in that deal that we invested in last year, the projected returns are about 20% annually or 100% return over about 5 years. That's a projection. And so far, we're pretty much on track to meet that after 1 year. So we'll see. But there is a risk that returns can actually even go negative. How might that happen? So, and I've mentioned this to a lot of you guys on individual calls, but people who have been investing in syndications for quite a while, 5, 10 years, there's a particular pain in those investors right now because deals that looked really awesome in 2021 and 2022 might be falling apart right now to a point where investors who might have put in 25 or $50,000 might not get anything back. That's because their projections got blown up by the interest rate hikes of that time period. The Federal Reserve like quadrupled interest rates, and a lot of people didn't see it coming and were using variable rate debt that could not take that stress test, basically. So their deals are falling apart. Their real estate isn't worth what it used to be. But, and I mentioned this a little bit later in the presentation again, but unfortunately for them, that is opportunity for new investors. So, but for those investors, they may lose capital. That is a risk. The thing about it, though, is that that's pretty much your entire exposure. Pretty much all you can lose is the capital you put in. There's no lawyers who are going to come after you as a limited partner or silent partner. That's pretty much the risk. Okay. Now, do I expect that any investors are going to lose any capital in any deal that I bring forth? Of course not, you know, but that is a possibility. What are the potential benefits though? Because that's why we're here, right? So this is basically a very simple spreadsheet or Excel sheet that shows what you can do, investing $50,000 a year into the stock market at an average return of about 10%, or real estate at an average return of about 15%. And it's not rocket science. That extra 5% over time is incredibly material. And we want to get to the exponential part of that curve as quickly as possible. So the deals that I'm looking for deals that are trying to offer about a 15 to 20% annual return because I think that's a fair return to expect for the increased risk of investing into something like real estate syndication, which is illiquid. Um, so that's what we're hoping for, faster wealth accumulation and cash flow along the way that over time can build to a point where you can pull back from your clinical duties if that's what you want. And you can use that cash flow if you would like to pay for expenses. Also tax efficiency. And eventually, what's the goal? We want financial freedom, we want more autonomy and control over our time and increase life satisfaction. So that is the goal for you in these investments, in my opinion. So this is what we covered. It's been about half an hour. And since we have a little bit more time, there's a little bonus question that I threw in at the end. What can you use to invest? Obviously, you can use cash. It's pretty common to use self-directed IRAs. So if you have an IRA or a 401k from a previous job, you can roll that over as long as your plan allows into a self-directed IRA and use that to invest. I've done it. There was one investor last cycle who used a self-directed IRA. It takes a little while to do it. It takes about a month or so to set it up, but it's for a lot of people your biggest pot of cash. So that's definitely an option. If you want to go that route, definitely contact me. I'll give you some resources, a third-party administrator who can help you do that. And the way that my fund is set up, only 25% of the cash that I'm bringing into investment can come from self-directed IRAs or retirement funds. So just we'll keep that in mind and I'll keep track of that. And depending on the investment, you might be able to use what's called a 1031, which is a way of trading one real estate investment asset for another. So these are all possibilities. So I'll leave you with one final thought. So I was alluding to this, before, but be fearful when others are greedy and be greedy when others are fearful. This is a quote from the famous Warren Buffett of Berkshire Hathaway. And there is a lot of pain that you're not going to read about it in the paper because these are all private investments, but there are a lot of real estate deals from that era that are not doing great. They're going to be falling apart, and we are going to be in a good place, I hope, to capitalize on that. And although I feel for those investors, I never want any investor to lose any money. Um, this, it's a cycle of investment, while others are basically experiencing some pain that leads to opportunity for others. So I think it's in the cycle of, real estate, there is opportunity that is both here and coming in the future. So what's next? I'm hoping to identify a great deal for you within the next 1 to 2 months. What should you do? Tell a friend about Cereus Real Estate, educate yourself. Um, I sent it out recently, but I basically started a educational page that links to some of the educational blog posts and things like that I've written on the different platforms that I have, like my blog. All right, so that is it. I'm going to stop sharing the presentation. I'm going to, turn off the recording in a second, and I'm going to move to Q&A. And if anyone wants to introduce themselves, a little bit of time for basically community building and socializing. So let's do that. Thank you very much for joining in if you're seeing the recording. And as always, please reach out to me. I'm more than happy to talk on a one-to-one basis on Zoom. And good luck with everything.